Hi, Nick and I are here today to talk about how traditional investment advisors have failed investors like you this past year.
Yeah, they haven't done a very good job, have they? They started off, everyone was recommending 60/40, and only people who could, foresee that interest rates were going to go a lot higher could foresee that anything that had long duration in it was going to get absolutely killed. And they certainly didn't do a very good job of that, and they didn't foresee it. And in fact, as far as I know, I haven't had a single advisor who's looking after my money who's told me to sell my 60/40 allocation. What about you?
Right. I've always been a more of an all-weather fan or a risk parity fan, and that has underperformed too. It's not just 60/40, it's all asset portfolios have done poorly. Um, 60/40 is down 20% right now and had its biggest drawdown as 25, and all weather portfolios or risk parity portfolios are down 15%. The commodity and gold type additions to portfolios haven't been enough.
Yeah, no, they held them far too low for far too long. But the whole point of I think of what we want to do is to actually tell people in advance in a very uh, brief format, brief weekly format, what is happening in the markets, uh, how how that might impact what is going to happen in the next few weeks, and to have them positioned in advance for moves that might happen, or at the very least to be able to talk to their investment advisor and get advice from him how they could mitigate that impact on their portfolio.
Yeah,
Don't you
absolutely.
agree?
Absolutely. I mean, wealthy people pay, 1% fees to get their money managed, and they're receiving questionable, confusing, and often biased advice from their advisor. And our job, we're not investment advisors, but our job from our experience in markets for, 4 decades each practically, um, are to arm the investor with enough information so that they can ask the right questions of their advisors and hold their advisors accountable.
Yeah, no, they've. It's very tough when someone who's not a market professional goes to see their investment advisor. You have to rely on them, really, don't you? And you don't get the best advice often, especially if you have a smaller portfolio, something, sort of under 8 figures, where they don't really consider that to be very, very, very lucrative for them. So you need to be armed with certain arguments to be able to challenge their narrative and ask the right questions, the pertinent questions, which are going to challenge them and give you better answers from them, so your portfolio can be better positioned. And certainly, I know from experience that when I used to go, I mean, I still go occasionally to see my wealth managers at J.P. Morgan. The fact that they know that this is what I do for a living sharpens them up no end. They come up with their A game, with their top guys, as opposed to someone who is just there to fluff up, sort of whatever they want to say to the client and just get rid of him.
Right, and I think what you're talking about is that most financial advisors are long term, um, use long term stale investment theory that has not experienced anything but accommodative central banks and falling inflation for 40 years. There's literally no financial advisor that has lived through these types of markets that we are likely to be in for the next decade.
I absolutely agree with you. I think the era of permanently low inflation is probably over. We have to concentrate on timing the markets, and market timing has actually been a dirty word for what, over a decade. And I think it's coming back, it's come back, and it's going to be with us for at least another few years.
Right. I think when many of our the audience we're trying to reach speaks with their financial advisor says it's not a good time to sell. That's sort of a stock answer, that it's not a good time to sell, and that anyone who tells you it is being tactical and they're thinking in the long term. And that's the stale advice. It's not tactical to protect your wealth. It's not tactical to say, I want to be reduce my risk, or I want to be less exposed to these sort of outcomes. That's strategic. And what we're hoping is that you can have a strategic dialogue, a well armed strategic dialogue with your financial advisor.
I absolutely agree with you. And certain, overlay options, strategies are going to be very important over the coming years. And really, we need to arm people with A, the knowledge, and B, the levels that where one should increase risk or decrease risk. So they know whether they are playing offense or playing defense. At the moment, we're very much playing defense. And we should continue to do so in the foreseeable future. But that is actually a completely different topic that we can address at some other stage.
So why us, Nick?
I'm sorry?
Why us?
Why us? Well, you and I started in 83, in the autumn of 83. When did you start?
86, soon after.
Okay, so if you put it all together, what is that? An average of about 40 years apiece.
Yep.
And it's, I experienced the tail end of inflation, and I've experienced another couple of inflationary blips since I started, and I know how restrictive the Fed can get in a hurry. And fortunately, that is what prevented me from getting absolutely killed this year, like a lot of people. I know how volatile these markets can be, and so do you. And more importantly, I think through our experience, we know that one has to become proactive in times like these. One just cannot rely on the good old-fashioned Fed put to get you out of trouble, because I think the Fed put has disappeared and a lot of people are still hoping for it, but it's not happening. Basically, hopium is not going to be good.
I think the issue that hopefully we offer is, we're two graybeards, but we're not talking about old times here. We are both deeply involved with markets today. We're doing cutting edge research on the economic environment, and we are highly involved in markets. And so not only are you getting some experience that the two graybeards provide, but you're comparing us to the thousands of investment talking heads who were not even alive for the Volcker era, children in the tech crash, and in high school in the great financial crisis. And so those people are close to the markets. And so maybe you think that two graybeards doesn't have an advantage. But when you combine our current deep involvement and our perspective, I think it's something that we can help the investor understand.
Absolutely. I think in these markets, there is no substitute for experience. And I really think that we can do a good job for people, just arming them with arguments that they can talk, to their investor and advisor with. But also what we want to do is provide them with the way that we manage our portfolios and give them basically a live look at how we put together a portfolio initially and how we manage it through time.
Yep. And the portfolio will be our live synthesis of exactly what we would do and what we do. But at the same time, we're also, by tuning in once a week, we expect you'll be able to rapidly compound your understanding and run up the learning curve in a surprisingly quick way so that within the first quarter you should expect to be able to talk to your financial advisor in a completely different way and in a way that'll make them realize you're serious about your investments.
Absolutely, and that's why I think it's so important that I've set up this separate account, which will be live. No orders will go in there without us having discussed them in the videos and posted them. And you know, I've just opened it. It's $250,000, so that's easily scalable for people. And in the first video that we will do, we will put in the first series of initial orders, having discussed the current situation and where we think the markets are going and why. And then it'll be absolutely live. And you can take it with you to your investment advisor and say, well, give me arguments against this allocation, this model allocation from these guys. And if they give you really good arguments, well, why not? But we are giving you our arguments and we're putting our money where our mouth is. And you can see the performance of our account in real time, through time, hopefully for many, many years to come.
And so you should expect we're running longer than we'd like, and we want to keep every one of these conversations pithy and easy to digest. But what you should expect is 20 minutes of a quick hit that escalates your understanding of what's going on in the world and how it impacts your investments. That's easily consumable once a week. And that's what you should expect from Two Graybeards, and we look forward to helping you help yourself with your financial advisor.
I couldn't agree with you more. I think most people who are not investment professionals don't really have that much time. 20 minutes a week and no more than that. We promise to keep it to 20 minutes or less, tell you what happened last week, if anything did, what we expect to happen in the future as a result, and basically track our portfolio through time so you can see when we add risk, why we add risk, when we play defense, and why we play defense.